Hi everyone and welcome to another quick tech video. Today we are looking at Worley Parsons, which is now known as Worley Limited. So it's a engineering company that services the mining and energy sector. So it operates all around the world, and some of the companies that it provides services to is the oil and gas, resources, chemicals company, regional, locally focused companies, national oil company, and government-owned utilities. So now the way I found out about this company is that I look at the market movers from yesterday, which is the 13th. Today is the 14th, and this one was one of the better movers on the day. All right, now let's jump straight into the ratios and let's have a look. All right, so let's say P ratio 37.59, so which is always it's always kind of good sign to have a positive number. I mean, like, it's not the highest, not the lowest, but it's not bad. But the industry is 26. So what we need to keep in mind is that for higher P ratios, we're expecting. That's all we're basically saying. If we buy this, we are paying a premium. So we're expecting that the company will have a higher return in the future. Cool. Now with the quick ratio, let's move down to that. There's nothing, and current ratio is 1. So it does pay dividend 4%, but it doesn't really say if it's franking or not. Possibly because franking may be an Australian thing. I'm not too sure about that. And this investing.com website is mainly about for international users, so it's not specifically. I'm not sure why to type in AWS. All right, let's go to ASX and have a look at if there's any franking for this company. While that is loading, let's move on to our cash flow. While that is loading, all right, man, internet is terrible. All right, so 12 months, so that's a good sign. Operating cash flow been going up in the last 12 months, and it's dipped a little bit, but it's gone significantly up. So that's always a good sign. So look at that, 13. If that's a million, so that's $13 billion in cash receipts. So it's doubled its last year. So that's probably there's a trend going up, and we'll have a look at the chart a little later. Investing, it's great. It's spending money and research and whatever not. And so other investments, financing. So it's paying back debts. So paid back dividends, but retirement of debt. So that's always a good sign. So overall, the negative, it's the net change in cash is negative 2 million, which is not bad because in the grand scheme of things, that is really nothing. All right, now let's go to balance sheet and have a look at that. So balance sheet. All right, so total current asset gone down a little bit. Cash has gone up a little bit, and total assets is gone down a little bit. So that's okay. It's still not like significant amount of cash. Total assets has gone down. Now current liabilities is 3 billion. Cash can't cover that. That's probably why we don't have any quick ratio, but we do have a current ratio. So 3213 divided by 3127, yeah, so 1.02, so 1.0. So I think it says 1.08 before, so that's why. All right, total liabilities is $5 billion, but the total asset is what is that, 11 billion. But keep in mind that when you're looking at debts and stuff, you want to look at the amount of cash that's available to actually service those debt, because otherwise it's you can't pay a debt with a factory. Even you have to sell the factory first, and if you kind of hot sell the factory, then you have to sell at a discount. That's why it's always good to have cash in hand. And so it's looking okay. Again, it's looking okay so far. So this company hasn't got everything that as all the indicators that I want to see in a company to say it's a great company. Definitely have higher confidence in buying it. But overall, it's not a bad looking company at the moment. Not the best looking company. Common shares outstanding. All right, now moving on to income statement. Oh, that's loaded. That's fantastic. Forgot about it. 37, net profit, cash flow, annual yield, the dividends, franking 0%. All right, so franking here is 0%. Basically what it means is pay dividends before pay tax. So when you receive the dividend, you have to pay the tax on that dividend also. And the reverse is true. If it's 100% franking, then it pays, it's already paid tax, then it pays you the dividend. So you might get some tax back, franking credit back when you do your tax return. So I believe it seems like it's an Australian thing only. I might have to check on that. But if you're in Australia and you're buying companies, you want to look for a company that has franking credit already paid, 100% franking. Cool. Let's move on to the income statement. Okay, so revenue is looking really good. It doubles revenue. Operating expenses doubled. Operating income gone up. So let's go straight to net income. Net income gone up a little bit. It's a little bit, but you want to keep things in perspective. Like one is going up. That's always a good thing, isn't it? And it's paid back a lot of debt from what we can see. So taxes, expected net income after tax. So what drained is total operating expenses. Oh yeah, that's the total operating expenses, right? It's doubled here. So total operating expenses. So you got the operating income. So let's do a little bit of math, just so get things in perspective. So there we go. That looks good. So 13044 minus 12244, we should get 800. So that's the gross profit. So the cost of goods sold. So like the expenditure that you needed to pay to actually provide the services or products. So cost of goods sold or cost of services provided. And then so what it here, so that they add these two together. So cost of revenue, and that's why we minus these, and you get the profit. Okay, and then total revenue, operating income. So 3, and to get the operating income is 13044 minus 12663, 381, and then you minus all these items. I won't go on to do everything. You get net income of 117. Again, it's an uptrend. Always a good sign that net income is an uptrend. So looking better so far. All right, so that's pretty much everything. Let's move on to the chart and have a look. So you can see that I'm gonna pull that down. It's a bumpy ride, and you want to see all these as far as it will go. Yeah, that's fine. Where's that? 2016. So it's gone down since 2016, but it started to rise back up since 2016, and it gone down again 2018, and then here we have the pandemic happening, so it just kind of crashed. So, but now it's rising back. It's rising back up for it's that's 480 if you bought at the bottom. Now it's $12 again, 200% profit return in like less than 12 months. That's not a bad thing. So we probably want to figure out where's this company in its growth cycle. It could be in the middle of the stage 2, and heading towards the stage 3. So stage 1 is baseline, stage 2 is the rapid growth, stage 3 is the top, stage 4 is the decline. So it seems to be going through that motion, because if it's servicing mining and energy sector, then those kind companies are quite cyclical. Mining companies are a little bit cyclical. So if it's servicing those, then it has that's kind of risk also, because those companies might not need it during their downturn, and then as on their upturn, then they'll start hiring this company again. But from what I read briefly prior to making this video, is that they've been awarded a contract, a 3-year contract with a Canadian company, and that's explained the spike in the price. So now, yes. So what does that mean for me in terms of investing or trading in this company? Is that the hype could possibly continue and push it up to this particular point at $15.97. So that's it seems like it's already broken this bottom here. So it hit that support and is bouncing back up. Could hit this first, a 13.88, go up to 16.37. So let's have a look. If it's $12.95 now, $14. So 14 take $12.95, and that's divided by $12.95. So I'm still looking at a good 8% there. So if I'm really worried and just want to do a short-term trade, I can definitely do that and get 8% out of that. Otherwise, if it go up to $16 at $12.94, 16 take away $12.94, divided by $12.94 is around 23%. So that's not a bad thing. So if I put in I'll probably put in $1,000 on market open today and see what's happening. So it looks like it's forming that handle, a cup and handle formation. I'll draw it out in a little second. And it's also showing on the MACD that there's a buy point around this point. So that's not bad. That's a pretty good indicator right there. But you want to look at this one. Yep, that's a good one. And there's an upturn here. So let's have a look at that. Yep. So, and this one. Yep. So this MACD is going well for me. Yes, there's another one there. So basically, I'm saying I can trust this MACD. So I think I'll have a good curve here. So let's draw the Fibonacci and see what's going on. Fibonacci retracement, Alt-F. Okay, keep that in mind. Oh, let's do it the other way. Turn around. Now and then I get it. Oh, what's going on? There we go. Bright eyes, come on. Oh my god. What is going on? There we go. Thank God. I think the trading views recently did an update and it's not working well for me. Yeah, so it seems like it hit the 78. No, I think I should move this one. What is going on, mate? All right. Did they do something to this? Anyways. Anyway, so you can see, I gotta figure out what's going on here. I'm just gonna delete this one. Alt F. All right, let's draw from up here to down here. Sure, so this resistance there is at 78%, so it just kind of broke through that and now it's coming back up. So, you know, there's still a high chance. I think there's a high chance of going up to that original 100% mark and go even further than this one. And that's probably when I reassess if I want to sell it, take the profit, and continue, or just you know, leave some of the profit in there and just take out my initial investment, and then that's just basically a risk-free investment. So I think there's a lot of upside here for me. So I will put in some money, and you can see down here that we have a net income chart, and you can see it's been going up. So it's reflecting what we were looking at in investing.com. So, all right, the plan. Oh yeah, I got to show you the cup and handle formation that I can see with this company. All right, so let's get my snipping tool so then I can actually draw on it. New, and I just need that. All right. Okay, so you can see. Yep. Anyways, I'm just marking out the points that I was talking about before. There's another good one. Now, you know, you kind of like, hey, you're only picking the good one. This is pretty much confirmation bias. Yeah, could be. But then again, you know, you have to go by, there you go. There's a cup of handle. You have to look for certain things like this. And it's just, there's specific trends to look for. Okay. So if you say it's a confirmation bias, so let's see. Goddamn, can't do WOR. It's a very troublesome video, this one. All right, now let's see. All right, here is a point that crossed, so the MACD line crosses both the signal line, and it's still going down. So then you say, yeah, why don't you worry about this point? Yeah, that's true. You want to worry about those points too. So, but it's just kind of say here, it's often than not, you know, there's these kind of indicators kind of show there's an uptrend. So there possibly not be, but you got to work on probability. There's no 100% in any of these indicators. What you got to go by your intuition, how you're doing it. It is kind of up to kind of experience you build over time. Okay. Oh, and the other thing I forgot to mention is that the volume here is a little more, a little higher than normal volume. It's not much. This one is a really high volume, so it dwarfs everything and it skews the perspective of the other ones. So you look at these ones. So these are huge volume, but if you really zoom in and get out, that's double the volume from yesterday, right? It's still high volume. It's a higher volume. It's not definitely not this one. But so what I can do is I can wait for that to kind of consolidate. Maybe the trend will consolidate. Maybe we'll drop back down a little bit because there's an overhype. But I don't think so. I think this trend will continue because this is a big news. And I'm expecting today is going to be a bigger volume and it's going to probably hype up a little bit. So I really want to get in. And yeah, so, you know, there's our cup and handle formation that I just mentioned. So that's, you know, that's one of these signs. So I expect it to kind of go up to this point, teeter-totter a little bit, and then continue up to this point and possibly going up all the way. So I can either sell here, something like that, just take out my principal and leave the rest in there for it to continue to grow. So that's the plan. All right, so thank you so much for watching this video. quick tech video. Again, this is not meant to be a financial advice video. Should seek it from your financial advisor. God, I got to do this disclaimer every time. But yes, so again, if you like what you see, share and subscribe, and like and comment, all of that good stuff. Again, keep it civil. And if you want me to do analysis on any company, leave a comment down below of what the companies you want to look at. I don't mind looking at foreign company. Most of the time I look at ASX company because I'm based in Australia, and at the moment Australian companies looks quite appealing. I do have stock overseas in Nasdaq and New York Stock Exchange. I don't mind telling you what they are actually. I got Tesla doing well, Disney doing better, and Tilray, which is doing quite well. It's a massive jump, and I'm kind of worried that that we could talk about this another time. So Tilray is a cannabis company, and it has a massive jump in prices, and I'm kind of worried that's just like hype. So I took out my principal. I still leave some shares in there from the the profit I've made. So I'm applying the principles that I talk about in the video. So I'm following through what I do. And I think that's one of the important things. Again, this is meant to be a video diary for myself, but I'm kind of making it public just to talk about the knowledge, because I'm not shy to kind of share what I think in terms of these things, because I might have something wrong and someone in the comment may be smarter than me and really correct me, and I would much appreciate that, because the end goal is not my pride. The end goal is to make money through trading and investing. So I'm not afraid to kind of voice my opinion and get them wrong. So but that's why the other thing about that is that if you're gonna invest in, you're gonna make sure you do it from your own. You're gonna make your own decision when you buy, when you sell, what to invest and stuff like that. And at the end of the day, you can't blame anyone else except yourself if you make a bad investment or you miss out on a good investment. Anyways, that's just the there's just some little talk about investment. But yes, thank you so much again for watching, and I'll see you guys next time.